Greetings and good day. I hope you are doing great. I'm with you with the daily analysis of the global gold ounce on March 18th. As we saw last week, gold prices closed in the $5,015 range after a drop of over 3%. And with the start of the new week, the price opened with a downward gap. So far, we've seen a drop of over 0.6%.
Learn and enter the world of binary option with us. Binary option indicators, powerful strategies, learn, trade, win. Level up your trading.
In gold prices, and it's now trading around $4,971. Looking at the daily time frame, we can see that after the start of military conflicts in the Middle East, gold prices rose in an initial reaction. But after reaching around $5,415, it faced selling pressure. And since the war began, we've seen about a 6% drop in the price of gold. The drop that occurred met with good support in the $5,000 range. And in the last 2 days, we've seen that the price hasn't been able to close below this support level. If the daily candle can close below the $5,000 range and this support is lost, we'll have the next key support at one of the previous lows, around $4,875. A recently published analysis from UBS, examining various factors, stated that despite the Middle East war, gold still has growth potential. One of the important factors examined in this analysis is the prolonged conflict between Iran and the US, which could increase economic risks and, as a result, strengthen the demand for gold as a risk hedging tool. Furthermore, analysts still expect gold demand to increase further in 2026. According to World Gold Council data, global gold demand exceeded 5,000 tons for the first time in 2025. This is while supply remains limited and some mines will reach the end of their production capacity by 2028. The provided analysis stated that in the short term, rising energy prices and inflationary concerns strengthened the US dollar and the likelihood of interest rate hikes, both of which are considered negative factors for gold. This very issue caused the recent drop in gold prices. But as mentioned, analysts predict that with the easing of tensions, gold can once again return to its upward trend. Now looking at the 4-hour time frame, we can see that for the first time in the last 2 days, the price went below the $4,966 level, and it's busy filling a 4-hour FVG area. If this candle can close below this range, if this candle closes below this level, it's considered a bearish break of structure, and we can still expect the gold price drop to continue to the 4-hour order block. We're currently examining the 1-hour time frame. In this time period, the dominant trend for gold is still downward. And until we see better support for the gold price, we can expect this downward trend to have come to an end. Accordingly, in line with this trend, we'll try to look for entries into sell positions during price corrections that occur in internal liquidity zones. For example, currently, we have 1-hour FVG liquidity around the price of $4,980, and also good liquidity above the equal highs in the $5,040 range. If we see the price returning to these areas and collecting the existing liquidity in these areas with a sweep format, we can enter a sell position and follow R to R ratio targets of 1:1 and 1:2 downwards. Good luck and be profitable.
Do you know why your profits are smaller than your losses? Because you don't analyze your trades, you just execute them. Download the Trading Journal app for MetaTrader 4 and 5 for free now.